remain the same as we had at question number 142. The ask of this question is to calculate non-current liabilities at 31st March 13. The facts remain the same. On 1st October 2022, 6 months before this reporting period, they acquired a server for 800,000. Its useful life is 10 years. The residual value is 120,000. Depreciation method, straight line method they are following on time apportioned basis means this will be 6 months period only because the company acquired the asset on 1st October and the reporting period ends on 31st March. So we have 6 months here, and they received a grant from government for 240,000. The government's policy is that for these grants, if the company intends to hold the asset for 4 years, if the company holds it for 4 years, they will not have to pay anything back to the government. And in the question, it also states that the government has the intent to hold this asset for 4 years, and also the company has the policy to recognize the grant income over the useful life of the asset. So useful life is 10 years, so the company will recognize so income. I mean, keep this grant as deferred income in non-current liability section, and over the period of you know as liability, I mean as deferred income, and over the period of 10 years, which is the useful life of the asset, they will recognize income over this 10 years. So this is asking about non-current liability. So this grant, they are treating it as deferred income first. Okay, they are saying it is all my deferred income when they received the grant. Then on 31st March 2013, this is 1st October 2022. The treated it as deferred income, so it is in liability section. Then 31st March 13, they will recognize income over the useful life 10 years, but we have 6 month period in this year only, so we'll divide it further, divided by 2. So 12,000 they will recognize um, as what, as income to PNL. So then on this date they will have um, on this date they will have deferred income of 240 minus 112. But here also, how much will be non-current, how much will be current, and how much will be non-current. So on 31st March 13, so on if we look at 31st March 14, which is the for 12 months period from this reporting period, here how much will be our deferred income here, because again what we will they do, they will again you know this 240 divided by 10, so this 24,000, so we will divide it from 228, no to how to do this. It is k 14 minus this, so they will, I mean the remaining will be 204. So in the next or the other way we can do to make it even simpler, here we can just say that in the next 12 months period they will recognize another 24,000, right? Another 24,000. So this is current, okay, because in 12 months period it will change. And then in the for the non-current, how much we will have, 228 minus 24, so 204 will be our non-current liability. 24 will be current liability because it will move from deferred income to income within 12 months period. So total will be 228, but out of 228, 24 is current liability because it will um move to income, and then the remaining will be non-current liability, which will further be moving to income over the course of the remaining useful life of the asset. So our answer should be 204.